in terms of equities for the next semester, or maybe a longer term? First of all, in the developed markets, and then in emerging markets.
Yeah, it's always very tough. Next 6 months, who knows? Let's say we all face the same issues of everybody. So valuations are pretty high almost everywhere. So we reduce the weight of equities and we increase the weight of gold. It's not a substitute, it's the end, but that's something we did, and the volatility can be pretty similar. We have an underweight position in the US for the reason I said. We increased tactically, so for the next 6 months on a relative weight, we are more positive on Europe, even if longer term there are many issues. In emerging markets, we don't have many positions, I must say. I mean, we are not that positive on Asia. Even LATAM, we see better value in the credit market on certain countries and not in the equity market. So I would say our position in equities is pretty cautious, and for the next 6 months, I'll say it's going to stay this way. I mean, we are value investors, and value investors like when there is blood in the street. And I mean, the last crisis was 7 years ago for the developed markets. So I cannot say there is a lot of complacency, but rising prices are narcotics. They have the same effect. So for value investors, it's very difficult to see there is a gap between value and price. So we stay put, we wait for better moments. We can be tactically overweight somewhere, but not a lot of money to be made there for us.
Longer term?
I mean, longer term, it's really, I mean, it's better because productive assets are the place to be. So if you have positive cash flow companies with competitive advantage, with good management, I mean, if you have a long-term view, you usually end up pretty well. Most of these companies are, in our view, in the US. I mean, really, it's getting worse, as Professor Salvatore is saying, but still the corporate governance, the strategies, the advantages in terms of market share, economic moats, as Warren Buffett says, is more often found in the US. In Europe, we always say we don't care that much about the shareholders, we care a lot about the bondholders, so it's more difficult to find, let's say, very good long-term ideas. There are many anyway, so in other periods we will be more aggressive, but honestly not now. But it's not a market-based strategy, it's more on company by company with a tilt on the US.